Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. And on today's show, we have Jeb Handwerger, who is the founder and publisher of goldstocktrades.com. How are you today, Jeb?
Karen, it's a great day, and it's great to be in gold. Thanks for having me back here on the show.
Let's begin by talking about an article on your site that explains about the TSX venture and how you draw some interesting comparisons to the year 1999 in terms of value. At that time, copper was under 75 cents a pound and gold was under $300. Let's talk about this and why putting history in context is so important for investors and speculators within the resource space.
Well, I've been lucky enough to be in this sector for almost 25 years now. And when I started back in the sector in the late 90s, I saw a lot of similarities to what we've seen this past summer in 2018 to what happened 20 years ago in 1998 when I was actually going into university and deciding on what career path that I was going to take. And I chose mining, to study mining and engineering and mathematics back in the late 90s because I believed that was the sector to be in. And there's so many similarities between back then and right now. At the end of the late 90s, we saw a complete, the gold sector was really at a major low. Gold was below $300 an ounce. Everyone, including all my friends, were going into the tech sector, the dot-coms. And I was going into studying metallurgy and engineering, which was boring back then. But I saw what was setting up to be a huge gold market. And my father, who grew up during the Depression, we both saw this. And that's why when we went back into the mining sector, and it really reminds me of what happened this past summer. And I wrote an article, record short position in gold's about to get wiped out on Seeking Alpha back in August of 2018. And that was really at a time where you saw an extreme negative sentiment in gold, maybe what I considered a selling capitulation. There was volume spikes in early August, and the sell-off was accelerating. And we noticed that the Vanguard, one of the biggest funds at the time, the VGPMX fund, the Precious Metals and Mining Fund, they didn't even want to have that name anymore. They restructured it. They changed the name. And then all of a sudden they come out, oh, it's a new fund. It's no more Precious Metals Fund. It's the Global Capital Cycles Fund. And for me, and I've been around the markets, when you see the sentiment that bad and where you see the sell-off in the gold miners that bad, where funds like Vanguard, which is a passive ETF, doesn't even want to have a precious metals fund in its portfolio. And then we saw this record short position where there was like a net record short that we didn't see in many since the end of 2015. Combine that with the change of the fund at Vanguard, and we saw a setup for a major reversal. And now we've seen this past since August until now. We've seen a major rally in gold, and we're setting up with a beautiful chart pattern, and we're setting up a cup and handle huge base that's come from 2011 until now. And it looks like we're really setting up for a huge, powerful rally. And one of the charts I showed back in August was this huge short position on gold that was 5 standard deviations from the norm. That's how bad it got and how much capitulation it got this past summer in gold. And that's when actually, I came out and said, we got to get into gold. This reminds me of 1999. And now, a few months later, we saw the stock market, the volatility, the Fed change its course. and gold is actually looking like it's setting up for a breakout as interest rates continue, may look to go, the Fed may reverse its course and actually start lowering interest rates.
Very good, Jeb. But let's talk about uranium. You wrote an article in August last year talking about how you're looking at the uranium market and that the action in the spot price and the general sentiment was making you turn bullish. You were also taking a close look at Cameco, which you consider a bellwether stock for the uranium space. So what are your current thoughts on uranium now that we are in the early part of 2019?
Well, uranium's one of those spaces that is really testing the patience, and we've had a lot of false breakouts, similar to what we've seen in gold over the years. And but uranium and gold and the commodity space are kind of set up together. And when we noticed that when the Fukushima and the uranium stocks topped in 2011, that's when it was a precursor to the gold's topping later that summer. So uranium is a hated metal. It's been basing for a long time, and it's made a lot of these reverse these false breakouts. So when this eventually breaks out, and when this moves, it'll be like gold on steroids. And similar to what we saw in 2007, we've seen a lot of these mine closures, but the demand for uranium continues to increase, especially from the emerging economies. So, it requires a lot of patience and it's been a lot of false breakouts, but still closely monitoring. There's very few equities that are strong right now. I'd probably stick to the Uranium Participation Corp because it's so hard to find these companies that can make money at where the uranium spot price is right now. But we're closely following that. When we see the spot price break out, that's maybe when we'll look at some new uranium companies. But a lot of them are struggling right now with either debt or production levels that are that they're losing money on the production, or the developers, the explorers like up in the Athabasca are decades away from development. So it's hard to find some really good uranium stocks. They're really hard to find. So we're sticking pretty much with following the Uranium Participation Corp at this point, and the large bellwether like Cameco.
I want to talk about the criteria you look for when investing in a resource stock, Jeb. There are thousands of resource-related stocks on many exchanges to speculate in. So how do you begin the process of looking for a potential successful pick? You recently tweeted about Sun Metals, which was a big win for you, as it is now in the process of being bought out. So let's talk about this.
Well, you have to really look at what the big boy, the major miners are going to invest in, and that's usually that number one thing you got to look is an asset, and grade. Especially in this market where we had this correction in prices, grade is a new high grade discovery. Is the thing that's going to make a stock move in this market, especially in a weak resource market. So that's why we focused on, guys that can make discoveries. And that was, the Sun Metals guys up and Lorraine Topper, which was a huge success story, and techs come in to invest. You got to really follow the smart people in this industry. You got to stay tuned to press releases. You got to, look for jurisdictions. Sometimes jurisdictions change, and if you get in when there's some good changes that take place early, you got to really be on top of your game with the junior space, and things change rapidly. And you want to make sure that you're ahead of the curve rather than behind the curve, meaning if you have a red flag for me, and that I've learned, is if you have, see, a story too much, and you hear it from too many places, you got to be careful. Maybe it's over promoted, it's overbought. You have to really, again, there's people in this business that continue to win and continue to make discoveries and continue to make transactions, premiums for their investors. And those are the people, those are the groups to watch. That's what I've done with my money, is place with good people that know how to find the top assets, and that can finance. You got to make sure that they can finance and drill these things and have news, because that's what drives these markets, is news and drilling news, especially in exploration. So that's where you have to really start learning the business, learning the people, and that gives you a little bit of a advantage in this business. And stick to the people that have had the track records and the assets. So yeah, we've seen that this past summer with Sun Metals. We've seen it. We've seen even in this market with Red Lake, the Red Lake Pure Gold and Great Bear have been incredible success story, high grade gold discoveries. But we're also looking right now, because gold's made a major run already over the past since August. Copper's just beginning to break out. Oil might be just beginning to make another move higher, and it's cheap. And the lithium and the battery metals, lithium, cobalt, and graphite, those things have been forgotten, and the demand there is huge. So, right now, gold, everyone's trying to hop onto the gold bandwagon, but you got to know sometimes when to get a little cautious when everyone starts getting bullish.
Some very good advice there, Jeb. Okay, as we begin to wrap up the show, is there anything else you wish to share or talk about today with our listeners?
Well, we're seeing the beginning of what could be a major new mining market. We're at the late stage cycle of this economic cycle that after the 2008 crash. It's been 10 years in this up cycle. Stocks are beginning to be extremely volatile, and we're seeing the commodities, the valuations in the gold space. We're seeing these mega mergers. This is a sign of a new bull market. We saw that in the 2008-2009 period. We saw that in 1999, and we're thinking that we're going to see a huge rotation back into precious metals, especially with the debt levels that have continued. Not Republican, Democrat, whatever party, the debt levels and the deficit levels in the U.S. dollar, which has done surprisingly well in 2018, is beginning to look to turn over. So keep a close eye on the U.S. dollar and the cup and handle chart pattern in gold and 5-year high breakouts, and could be an exciting year in 2019.
As always, thank you for being on the show again, Jeb, and we appreciate your time today.
Thank you, Karen. It's always a pleasure to be here.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?